Hello, and welcome to Stansberry Asset Management's webinar, Gold and Inheritance, What You Should Know. My name is Michael Joseph. I'm a Deputy Chief Investment Officer and Portfolio Manager here at Stansberry Asset Management. Many of you, especially our clients, will recognize me from our regular investment webinars, where our investment team typically talks about happenings in the market, our outlook for what's ahead, and how we're positioning our various strategies. Today's webinar will be different. For one thing, we'll be talking about one specific asset type, that of course is gold, but we're also going to be thinking about it in a different way. Here's what I mean. Typically, when someone thinks about an investment, it's a personal thing. What do I believe this asset is worth? Am I comfortable owning it? What do I think the world looks like in the years ahead that makes this an attractive opportunity today? In my experience, very few investors think about what will happen to that asset when they die. Now, it's natural to not want to think too much about that. But believe me, I've done this long enough to know when you're approaching that time, if you are given the opportunity to know, which is certainly not a guarantee, the last thing you'll want to be doing is sorting out your finances and investments. It's not how you'll want to spend your remaining time, and it's going to be stressful enough time for your loved ones without that added burden. Now, we hope that time is many years into the future for you, but regardless of your time horizon, it's something you absolutely want to get ahead of. The earlier, the better. Now, for your SAM accounts, the wealth manager that you work with is more than capable of walking your heirs through the accounts that are managed at SAM and can assist them with adjusting strategies, transferring assets, putting a whole new plan together, whatever makes sense for them. We even have a SAM family resource binder to help them get a head start. I'll talk more about that later. But there are some assets that could be more nuanced, perhaps a bit more involved when heirs take possession of them. And on that list, I would definitely include physical gold, such as gold bars and coins. Now, at SAM, many of our clients own physical gold or have an interest to own it. That's why we're having this webinar. And so, to get us started, I'll be talking about SAM, how we view gold, and how we approach investing in it. But beyond that, we have something very special planned. We have a guest with us that is an expert in physical gold and has for decades helped investors incorporate physical gold into their portfolios. His name is Rich Chekin. He's the president and COO of Asset Strategies International. He's seen a lot, he knows a lot. We're very fortunate to have him, and I can't wait to introduce him to you. Rich is going to share his views on the gold market, how to approach investing in physical gold, because it is different than what we do here at SAM. And finally, as I alluded to, he'll talk about how to have that important conversation with your heirs. We've also had several questions come in from clients, and Rich, I'm looking forward to picking your brain about those after our prepared remarks. We'll, of course, spend most of our time talking about gold, but before we get there, I did want to touch on what we do here at SAM because we do offer many different strategies here. And the reason why is because our clients are unique. They come to us with different needs and in different situations. They have different preferences, time horizons, risk tolerances. So we don't take a one size fits all approach. Whether you're looking to maintain your wealth, to generate income, you're growth focused, or maybe prefer a more balanced approach, we look to tailor an investment plan that is optimal for our clients' needs. Now, one of those strategies is, of course, the gold strategy. And we have some clients that are more focused on wealth preservation. For some of them, it's just more of a preference. In any case, for those that it's appropriate for, we have a strategy that is purely focused on gold. And we take a four-pronged approach with that strategy. One part of that is investing in physical precious metals. And I want to be clear, uh, when we say physical precious metals, it's different from what Rich is going to talk to you about. We, at the current time, owned a fund that represents interest in a trust that owns physical bullion. So it has benefits such as being liquid, but if you come visit us at SAM headquarters, we're not going to take you to the vault where we have a bunch of coins and bars and stuff sold or held for our clients. That's not how we approach it. So physical gold is one part of that strategy. Major producers is another. So we're talking about the big miners in the world that have operations in different countries and different mines. That's part of it. Another is emerging producers. So the difference there is the emerging producers, some of them might just have one mine or they're located in just one jurisdiction. Some of them don't even have current operations, but they may own rights to a gold mine and they're doing feasibility studies or looking for an operator that will step in and start to unearth the gold in that mine. They have pounds in the ground, so to speak. And then the fourth part of the approach is in royalty companies. And this is one of my favorite ways to invest in gold personally. You can think of royalty companies almost as banks or financiers for the gold industry. They provide capital to miners so that they can get projects up and running. And then in exchange for providing that capital, they're entitled to a certain percentage of the production from that mine. Now, the beautiful part about this is a lot of the headaches that come with operating a mine, like dealing with labor costs and rising costs for machinery and local governments deciding that they want a bigger piece of the action and all this kind of stuff that happens frequently in the mining industry, they're removed from that. It's not really their problem. They just sit back and collect the royalty or stream of metals as they get unearthed. So they tend to be highly profitable businesses. Definitely one of the cornerstones of how we approach investing in gold. That's an equity approach. Rich is going to talk to you about another approach. And Rich, I've had you waiting in the wings for long enough here. I'm excited to introduce you. And on behalf of the whole SAM team, we're thrilled to have you. Rich, as I mentioned, is the president and COO of Asset Strategies International. So, Rich, if you would, maybe you can, before we hop into the current gold market dynamics, you could tell us a bit about yourself and what ASI is all about.
Sounds great, Michael, and thank you so much for having me. I'm glad to be a part of the SAM team. I met Chris Delora several months ago. We hit it off. We saw great synergies, and I think we can bring some value to your team, and looking forward to working together with you. I followed the typical path to becoming a gold dealer. I was a pre-med student studying chemistry at West Point, went on to become an infantry officer for about 6.5 years, got out, worked as direct sales rep in Macon and Atlanta, Georgia, and then moved up here in 1996 to the suburbs of DC to take this job. And I've been here now for about 29 years. So I think most precious metals dealers follow that progression, if I believe. I'm with a great company. My uncle and his partner started it back in 1982. I joined him in 96. I'm in my 29th year. It's in its 42nd or 43rd year now. And they've built a great culture of trying to take care of customers as we buy and sell gold, silver, platinum, palladium, bars, coins, certificates, rare coins, world and ancient and US. So we do a lot of different things, but we're always focused on trying to take care of the client. And one of the things, that we've run into over the past, 4 decades or so is, what happens when precious metals have to transition from one generation to another, which I think qualifies us immensely to go ahead and have this conversation tonight and point out some of the pitfalls that some of our clients over the years have experienced and how we might be able to keep you from falling into those pitfalls. So before I get there, I just want to kind of get an update on the market. Okay. It's obviously making headlines. Gold recently went over $3,000 an ounce. I don't think I have to make the case for gold to this group. If you're on this webinar, I think you already have an affinity for gold, but I just want to let you know what I'm seeing in this market. A year ago, we had just breached $2,000 an ounce with gold. And I was told left and right that gold was too high. It's at all-time highs. There's no way we're going to buy it here. It's not going higher. And I told everybody back then that it was dirt cheap. And they should buy it for sure. A year later, we just breached $3,000 an ounce. I'm hearing the same things. Gold is too expensive. We made 38 all-time highs last year, 13 so far this year, and we're not even out of the first quarter. And it is too expensive. It's at all-time highs, and there's no way I should buy it. And I'm telling people it's dirt cheap, and it's got a long way to go. And the reason I'm saying that, and I just want everybody to understand this, is you have to understand who is doing the buying. Investors in Europe and North America are not in this market yet. If they're in it, they're selling into it to pay down credit card debt. Okay? They are not buying into this market. Central banks are doing the buying. Central banks have been net buyers of gold for 15 straight years now. The last 3 years, central banks have bought over 1,000 tons. That is 40 to 60% higher than any of the best years in the previous 12. Okay, it's more gold than central banks have bought for 50, 60 years since they started keeping track of central bank buying gold. So they're buying a lot of gold. It is why gold is at all-time highs. When the investor gets into this, it's going to be even more interesting and more fun as an investor and as a gold dealer. The reason we know central banks are in it and investors are not is one, I look at the gold silver ratio. Okay, so that's the number of ounces of silver it takes to buy an ounce of gold. Um, right now, that number is about 90, 88 to 90. Anything over 80 suggests that we're in the early stages of a precious metals bull market, and gold and silver have not yet moved to the heights we expect them to go. And the reason for that is at that level, people are buying gold or starting to buy gold. They haven't bought silver yet. Silver lags. And then it starts to outpace gold as people buy gold and silver. Silver is a smaller capitalized market, so the price appreciation is much more severe and accelerated, and it catches up and surpasses gold as the market matures. So what happens is that gold silver ratio comes down to about 35 to 50. So we've been between 80 and 127 for years now, and the reason is central banks don't buy silver, they buy gold. Investors buy both, and they aren't in this market yet. The other indication we have that suggests investors are not in this market is the premiums are minuscule. So the price above the gold price that you pay for coins and bars to make it, fabricate it, deliver it to you is very, very tiny right now. So if investors were in this market in a big way, those premiums would go up as everyone's clamoring for manufactured product. It's not happening. Investors are not here yet. So great time to be picking some up. Even at all-time highs, it's still dirt cheap. So the question then comes, if you buy into that argument, well, who should own gold, right? In my opinion, everybody. Gold is for everybody, and you know this. Again, I'm preaching to the choir because it's a store of purchasing power with high liquidity for potential financial crisis you hope to never have. You buy a small allocation in your portfolio, and you hope that everything else in your portfolio does well, and it goes nowhere because then you don't need it. You don't need your insurance. I mean, you don't buy homeowners insurance and hope you get to cash it in, right? Same thing with gold in your portfolio. You want to hold it just in case, but pray that you never need it, right? So everybody needs gold. It's highly liquid and it serves its purpose. Now, a lot of times, the next generation doesn't get what you're doing. You have the foresight to understand gold's role in your portfolio. You've seen this chart that suggests what gold does when you measure it with a mismanaged fiat currency, right? So you've seen this chart. That's why you're buying gold. Your heirs oftentimes have not seen this chart, don't get it, don't appreciate it. They haven't seen this one either, where gold tracks the money supply. You know, if you ever want to know where the gold price is going, just wonder, are we printing money or not? Yes, we are. We did it hyperbolically. Guess where the gold price is going? There's not a whole lot of mystery to it. You know this. Take the time while you're alive to pass this knowledge on to your heirs. It's critical that they understand it because when you pass, if they don't know what this is, the first thing they're going to do is sell it. And they're not going to have the benefit of that protection that you had during your lifetime. Okay? So now I want to cover just a couple different ways to deal with gold for you and or your heirs, right? The first thing is, if you have it, how do you sell it? It's a very simple process. This really isn't that difficult with physical commodities. You call a dealer. I would suggest calling several. Shop around always, no matter how trusted a relationship you have, keep them honest. We've taken good care of clients for years. I still hope they shop me because you got to keep me honest too, although I'll be honest anyway. You call, you get an indication. Right? Shop it around. If you like the indication, then you say, great, I'm going to send the metals. You find out where to send them to at the dealer, either to their facility or to a depository. They'll give you the address. Once it is received at the depository or at their location, they will update the price basis the current gold or silver price, fix it basis that current market. And if you're in agreement, they'll cut you a check or send you a wire. It is that simple. Now, understand this. Price is not everything. Most dealers operate within a fairly narrow band. There are criminals out there, mind you, that will try and take advantage of you. That's why you shop, to weed them out. Most everybody else operates around the same place. They're all in the ballpark, if you will. Trust is the most important thing when it comes to selling or buying metal. When you send funds, you want metal to show up. When you send metal back, you want money to show up. Okay. Moving on, look at how do you store? How do you hold on to the metal once you've bought it? Well, three things I'll raise. You can store it at home, you can store it domestically but not at home, or you can store it abroad. Very simple. At home, a lot of people cringe when they hear this. I take it back. A lot of people want to hold it at home. They have that desire to keep it in their hot little hands, but they do cringe because they know that they're responsible for safeguarding and protecting it. Okay, and that's a big responsibility. It's the cheapest way to hold metal until it's lost or stolen. Then it's the most expensive because it's 100% loss. But I do think, because of the definition of wealth insurance, right? It's a store of purchasing power with high liquidity, right? Meaning if you have an issue, you need to put your hands on the metal and deal with it right away. Okay, that's gold's purpose for that little bit of insurance in your portfolio. So that really kind of dictates you have to keep it at home, but don't hold any more than you feel comfortable safeguarding and storing yourself. Don't hold any more than you feel you need to bridge a short term gap to access funds elsewhere in terms of a crisis. So you're only holding what you need to get by and that you feel comfortable storing. Everything else, I believe you should put in the hands of the professionals. You're going to pay a little fee to have them hold it for you and safeguard it, and we can give you guidance. Just reach out to us about what you should look for in a depository. We can recommend some as well. The bottom line is there are things that you might not think about. Do they practice 100% insurance versus fractional insurance? If they practice fractional, we don't deal with them. They put your metals at risk, in my opinion. 100% insurance is the bare minimum. That's the only thing acceptable. Okay, so these are the kind of things that we can guide you through and get you in the right hands, whether you're storing domestically or abroad. The more you hold, the more you own, the more I think you should spread it out. Okay, so that's kind of how you store and some of the things you think about. Next thing I want to touch, how do you move metal? Domestically, internationally, and what we're here to talk about tonight, generationally. Okay, so first off, domestically, you can carry the metal on your person. There's nothing wrong or illegal about you taking metal with you on your person throughout the United States. Okay, you do have a bit of a risk when you do that. Okay, so keep that in mind. If you want to ship it location to location, it's done through the USPS, Postal Service, FedEx, UPS. Metals move through these vehicles all day long, every day. I've been here almost 30 years now. We've shipped hundreds of thousands of packages. I believe 2 total have been lost. One was never found, but they paid off the insurance to the person it was being shipped to, and then they paid it to us, and then we paid the person it was being shipped to, and then the other one was found and delivered eventually. So great track record. You would not think it, but a lot of metal moves safely through the Postal Service. When you move it internationally, you can carry it as well. A lot of times you can take it on your person. Alternatively, you can look at armored couriers to move the metal internationally. You can sell and repurchase on the far side if shipping it internationally is too cost prohibitive. If you choose to carry it with you, or if you're shipping it to another location, be sure you're wary of the customs laws of the country you are shipping it to. It makes a difference, and you don't want any surprises on the far end once it's there. Right. Last thing is generationally. And this is really what I want to kind of harp on here tonight. And that's, heirs are often overlooked. First off, they don't buy in to crazy dad buying gold. They don't get it. Educate them. Educate them. It's the best way that your efforts during your lifetime are going to pass on generationally and protect those you wanted to protect in the future. Just something as simple. My oldest daughter, she graduated nursing school. We got her started with just a small allocation of gold, and she knew what dad did all her life, and that's wonderful. She had a couple 10th ounce coins on birthdays and stuff like that. But when I made it her account, she started asking, well, Dad, I heard gold's up. Where's gold today? Now all of a sudden it matters. right? So put some in their hands, and I promise you, you'll see them respond to having gold or silver, and they'll start to understand what you've been doing for them all these years. Um, Heirs don't share the belief unless you help them share it, and they're often, as a result, lost. Right. So if you pass away and all this gold is dropped in their laps, they have no idea what to do with it. They're absolutely lost, and oftentimes their first reaction is, "Let me just sell it, cash out." Okay, and they do so by going probably to the wrong people to sell it to. Okay, so there's a way to protect against that. Uh, First off, take stock of what you got. Maintain an inventory, right? It's a bit of a pain. I get it at first. Put it all in a spreadsheet. Keep all the information you can for what you hold. A description, an American Eagle coin, weight, 1 troy ounce, fineness, 22 carat, probably not graded, in good condition, these types of things. Put as much information as you can. If you have a rare coin or numismatic, and it's graded by PCGS, Professional Coin Grading Service, or NGC, the Numismatic Guarantee Corporation, go ahead and list that. Mention the grade that it's in. Put the coin number, because it will be serial numbered. Anything you can put in there, do so. It will make life drastically easier for your heirs. If you need help, once you put that list together, finding out what you have and making sense, if you want to try and figure out how to divvy it up for your heirs, etc., come to us. We'll offer you a free appraisal for SAM clients. Won't even think twice. We don't charge you for it. We will go ahead and say, listen, if you sent all this to us today, this is what we'd pay you for it. Okay, just so you have an idea of what it's worth. And, we hope that in the future you might consider us as one of the options you shop if you needed to sell it. But more importantly, at least you'll know what you're passing on to your kids. Okay. Next thing is keeping your heirs in the loop. Um, be careful who you choose to receive those medals and when you tell them. I know some families, I wouldn't have a problem with telling my kids, this is what's coming to you when mom and dad pass away. Okay. However, not every family is like that. I get it. Some people you may not want to know. You may inform them with a trust. With some guidance as to what they have. I've known people to put trust together that say, listen, you get all this gold as long as you promise never to sell it. Things of this nature. So you can pass on your wishes beyond the grave as well. But anybody that needs to know. You need to tell them where that metal is located physically. You need to tell them where that inventory is located. All right, because they can't. It's like a treasure map. They're not going to be able to access those assets unless they know where they are and what they are. And when you do that, I strongly suggest that you include the cost basis. So include the confirmation. It is vastly helpful for the heirs to know what you paid for it and when. Okay. And most importantly, tell them whom to contact. Okay. If you have a trusted dealer, let them know. Tell them who to call when they need to sell or if they're considering doing something. A lot of times they will have long conversations with you in your lifetime as you're buying it from them, and they can pass on your wishes, whether they adhere to them or not. You can say, listen, Dad and I talked all the time. He wanted you to hold this for your future. Okay, and for the future of your grandkids, etc. And then when you get all that together, I would put that in your SAM family planning binder. It's the binder where you're going to keep all your important papers for your SAM account. You should keep it right in there with it. And I know we'll talk more on this a little bit later. So that's kind of what I wanted to touch on today. Just little minor points, things that will make your heirs' life much more pleasant, less painful, and I promise you, if you can pass on why they're owning it, and they can get that in your lifetime, then your work will pass on generationally.
Rich, that was fantastic. I've been taking notes here as you've been speaking. A lot of gems there. Let me thank you for offering that free appraisal for SAM clients. That's really generous of you, and appreciate you spending your time being willing to do that. I also noted I love the idea of involving the kids by starting them off with a little bit beforehand. I do the same with my kids. They have like small stock market accounts, and it's amazing. It doesn't really matter the amount, but if they have something in the game, they got a little skin in the game, all of a sudden it's infinitely more interesting to them. So I
It
love
makes
that
makes
idea.
it real. It makes it real. So
Very much so, very much. Well, thank you again for that. We have a number of questions that came in. We always get questions about gold, but in this market, it's even more than usual. So we'll tackle those really soon, and curious to hear your thoughts on some of them. But while we're doing that, we have some contact information posted on the screen for you. Some of you that are attending are already SAM clients. You already know how to get a hold of us, but I know we have prospective clients on the webinar as well. So we've provided a few different ways to contact us. You can, of course, pick up the phone and give us a call. Email address is there. You can visit our website for more information. We also encourage you to follow us on social media. So we're looking forward to starting a conversation with you, or to continue one if we've spoken with you in the past. As far as getting a hold of ASI, anything you'd note, Rich? Is there a best way to get a hold of you, or how should folks go about doing that?
yeah, I think the two most common are the phone number for if you're domestic or international. It works 301-881-8600. We've got a toll free line. It's not up there, but I'll just put it out. 800 831 0007. I just like saying the fact that we're 1-0 better than James Bond. So,
I
uh,
love it.
but there or email are probably the best ways to reach us. And we're here 5 days a week, 8 to 5. So,
Fantastic. Well, if you don't mind, I have a list of questions that I gathered from clients that knew we were going to be doing this, and I'd love to get your thoughts on some of these topics. So I'll
sure.
fire away if you're ready.
Sounds good. I've got a few
Um,
for you too, by the way.
uh-oh. Okay, well, no hardballs, please. Well, I'll get us started off. You know, a lot of our clients are pretty familiar with gold. They might already have their preferences or know their way around physical gold investing, but not everybody. Maybe some folks are newer, or they're just thinking about getting involved. And I know that once you take that first step, there's all of a sudden you realize the world of gold investing is a lot wider than you might have thought. There's different weights, there's different purities, there's different issuers. Is there one type of bullion that is best, if we can call it that, or for folks that are maybe just getting comfortable, is there a direction you steer them towards, or how do you approach that?
No, it's a great question, and honestly, it comes up all the time. A lot of folks want to own gold in their portfolio, but they just don't know how to get started,
Yeah.
right? So hopefully, we'll start down that road here. And a good dealer, when you call up, you say, "I want to buy gold." The first question they should ask is, "What's your purpose? What's your
Hmm.
goal? Why are you trying to buy it?" You might buy something different if you're looking for, a profit play versus insurance, which is what most people are looking for with gold, which is insurance. I think in order for us to meet that definition of wealth insurance, it's store purchasing power in a high liquid form. You need something that's worldwide readily acceptable. Okay. The Eagle in the US is the number one most popular coin in the world year after year. Number two is the Maple Leaf. Okay, from Canada. So now you have to sort out tariffs and whatnot. Now, I'm guessing, but the bottom line is the dealer can help work you through that. And there are Maple Leafs that are in the country that got here before the tariffs were imposed. So don't
Right.
worry about such things. But I've heard a lot of people over the years say that sovereign coins, so coins minted by governments, like the Philharmonic from Austria, the Buffalo, the Eagle from the US, Maple Leaf from Canada, Kangaroo from Australia, Krugerrand from South Africa, you name it, Britannia, Panda, that they're much better because they're more liquid. 29 years now, I've never had a problem buying
Hmm.
or selling a bar. Right, so bars are pretty darn liquid too, especially if you buy something that's in demand, like a Pam or Fortuna bar, something along those lines.
Okay.
Um, the other thing is the premiums, right? So, Eagle, you're probably going to pay more than anything else in terms of a higher premium. But what people don't understand is when you sell it back, you're going to get more than anything else you would sell back. And that spread tends to be kind of a constant, but you have a higher or lower entry point. So for me, it really comes down to preference. What do you feel more comfortable with? If
Hmm.
you're in the US, it's hard to make an argument against the Eagle.
Got it. Great information there. Um, During the prepared remarks, you mentioned numismatic coins. For the uninitiated, can you explain what that means and then talk about how that fits into a portfolio?
Yeah, by the way, well done. It's the most mispronounced word in our industry. And it's a big word for rare or collectible. But commonly in the U.S., it refers to early U.S. gold and silver coins, pre 1933, typically. That are There are only a few of them. There are a lot fewer yet that are in good condition because a lot of them were circulated, right? And to have something come out pristine when it was carried in people's pockets or thrown in a cash drawer
Mhm.
is hard to find. So you tend to look at these coins, and they also have world and ancient. We deal in those too, but it's hard to have those coins um, come in pristine form, and therefore there's that collectible element to it. It's not just the gold value. It's not just the silver value. It's how nice it is and how desirable it is for a collector that adds vastly to its costs. Now, what happens there is you're going to pay a much higher premium over the gold value or the silver value because of that collectability, that desirability. The dealer's going to make more money. You have to overcome a lot more before you're in a profitable position.
Mm.
Now, that all being said, collectors tend to buy with their hearts, right? So we do see those prices over time go up. And, as odd as it may be, there is some potential there. For me, it's not your first step. Okay. Bullion with low premiums and a store purchasing power is where you start out for that insurance in your portfolio. You may branch to collectibles with a smaller segment later, but
Mm.
it's not your first step, in my opinion.
Got it. I have more questions for you, but I know you said you had a few for me too. So
Yeah.
if you want, I'll give you a break. I'll let you fire one at me.
Yeah, sounds good. Sounds good. So let me ask you this: since we're talking about gold, right? And obviously it's in the news, it's on people's minds.
Yeah.
What sort of environment does Sam look to invest in gold? Is this it, or
No, it's a great question. Earlier in the presentation, I showed the strategies that we manage. I think I neglected to mention that we have gold in just about every strategy that you saw there. So we have the gold specific strategy, but we think of it as an asset that belongs in a well diversified portfolio for just about any investor. And that is really the case no matter what's happening in the markets. And I don't have to explain the direction of gold to you and how prices move, but it can be difficult to time in the short term. We have a good feeling that over time it will appreciate. The purchasing power of the dollar has steadily declined over time, and we strongly believe that that'll continue to be the case. So we think gold it obviously has a proven track record of maintaining that purchasing power. So for us, it's not something that we say, well, we really like it more if inflation is high, or we really like it more when geopolitical risk is higher, because those things are pretty darn difficult to predict in the short term anyway. So we don't really play that game. We just look at it as this is a great way to preserve purchasing power over the long run. It's a great crisis hedge when the proverbial stuff hits the fan. So we like it in all environments.
gotcha? So as a follow up to that, if I might,
Yeah.
you mentioned that things change, right? So does the Sam Gold strategy then change over time, or is it more of a static approach?
Yeah. So I would say those four pillars that I mentioned, the physical, the major miners emerging, and the royalty companies, I expect that those will always be in place. But what we do is, depending on a number of things, but we'll just say our outlook for gold and gold equities, we'll make adjustments. So, as an example, if we are heading into a period where um, cost of mining labor is going up, which is going to be a major issue for miners over the next decade, in my opinion. There's not as many people going into that business, and so the prices for labor are likely to go up. As I mentioned, that doesn't really impact the royalty companies. So if we're in an inflationary environment for labor, or there's been times when There's a shortage of machinery. You see the cost for those go up. Those are minor headaches. So we might want to scale back on the miners. Conversely, if we're bullish on gold, as you know, it's often the case that during bull markets, those miners can run ahead of the physical gold price. So maybe
Some
we
nice
want to.
leverage returns. Yeah.
Yeah, so yeah, it's and especially the emerging miners, which tend to have quite a bit more up and down to them. So it's carefully balanced. We don't want to have any area be too much of the portfolio, but we'll make those active adjustments depending on our macro view. And then, of course, within the individual securities, what's happening with them is management doing what they ought to do. What does the jurisdictional risk look like, and all of that too. So it is absolutely an actively managed portfolio.
Gotcha.
I'll turn it back to you if I can, Rich.
Sure.
On that front, we've talked about a lot of different ways to invest in gold, from the mining equities to physical bullion. How do you think about that in terms of risk and reward, and the pros and cons and takeaways as far as constructing a portfolio for clients?
No, that's a great question. A lot of people, they scratch their heads. You say you need to invest in gold, and like, well, does that mean mining
Right.
stocks? Does it mean a fund? Does that mean physicals? What does it mean?
Hmm.
Um, I tend to think it means a little bit of it all. I'm guessing you guys do as well. That's why I'm on this program.
Yeah.
Um, they bring different things to the table, right? So
Exactly.
so if you're owning a mining company, royalty company, et cetera, there's a great opportunity to get a leveraged return on your investment. Now it brings in other variables, right? You mentioned them all. The different variables, the geographic issues, environmental issues,
Hmm.
labor, et cetera. But you can make a lot more money with mining shares than you possibly could with an ounce of gold, right? So they all bring something different to the table. My piece of that pie is the physical gold coin, right? And I'm a firm believer that whatever your number is, mine happens to be 10%, it could be 5% or whatever.
Yeah.
Whatever that number is, I buy it and I hold it, and I hope I never need it, and I hope the rest of my portfolio vastly outperforms it. Okay. Now, so far this millennium, that's not the case, right?
Right.
Gold's outperforming everything except Bitcoin. But that's not going to be the case all along. And it's not why I bought it. I didn't buy it for a profit. I bought it for a store of purchasing power. I bought it for insurance for the rest of my portfolio. And I think it's a complementary nature that you need a little bit of everything if you're really going
Hmm.
to protect yourself. I don't know if you want to elaborate on that or not, but
No, I think that's spot on, and we agree, and many of our clients agree as well, which is why we brought you on to walk them through this, because in our view, they're different. There's trade-offs to all these different ways to invest, and there's not one is better than another. It really comes down to personal preference, and we think that having a diversified approach has a lot of value to it.
yeah, no question about it. Got another one for you,
Okay.
if it's okay. Um,
Yeah,
what
absolutely.
when you're talking to your clients, and I know you've talked to many over the years,
Yeah.
what kind of clients or what kind of questions do you hear from them regarding gold? I mean, have we talked about them? Are there other things they raise?
Yeah. One, you actually mentioned Bitcoin a moment ago, and and that depending on what Bitcoin is doing, sometimes that will come up. But people like, is Bitcoin going to replace gold? Is it gold 2.0 and that sort of thing? And I could tell by your head shake that you don't believe so. But for what
No.
it's worth, and I'll give you an opportunity to share thoughts. But we look at them as two separate things. We do see potential for Bitcoin as a long-term um, uh, purchasing power stabilizer. But in the short term, and I'm not telling anybody anything they don't know, it's volatile. It moves around a lot. It behaves a lot different than gold. As we're recording this, gold is hitting fresh all-time highs, and Bitcoin has gone down tremendously from its all-time high. So they aren't marching all the time in the same direction. They have some qualities that um, are similar, but they're also apples and oranges in other ways, and so we look at them as two different asset types. Part of the takeaway I think of this webinar is that there's different ways to approach things. Diversifying is is critical. And so, yeah, it depends largely on the client, especially when we're talking about cryptocurrencies. But we do think that there can be room for both. But I'd love to hear your thoughts on it.
Yeah, so I shook my head no because I don't believe that Bitcoin is at the point where it's replacing gold. Gold's
Hmm.
got a 5,000 year history of doing what it does, preserving purchasing power. Bitcoin's what, a 16-year-old angst filled teenager trying to figure out what it wants to be when it grows up, right? So
Right.
I am not against Bitcoin. I've been on a ton of gold versus Bitcoin panels, and they're always geared toward either own this or own this. It's a zero sum game, and that's not the world I live in. I own Bitcoin. I picked some up in 2015. I haven't sold any of it, and I can promise you, I'm pretty damn happy about it.
Hmm.
I don't look at it as a store of purchasing power. It's not the way it's behaving. I
Right.
still think at this point in time, it's a speculation because that's how people are buying and selling it. Okay. It may figure out what it wants to be someday. It may evolve into a store of purchasing power. It looks at times like it's getting closer to that, but it's still, I think, far away. But I don't have a problem with it. And I love the returns, and I'm along for the roller coaster ride. But it's not a store of value. When I need a store of value, I look to gold. And when I'm looking for a speculation, which means small allocation to me, I'm not an investment manager where that's like 1% to 2% tops, money I can lose and not blink an eye. I put
Yeah.
that into Bitcoin. The where they are very similar though is you think about it. The guy who sold 41 bitcoins for, or I'm sorry, 10,000 bitcoins for $41 worth of Papa John's pizza way
Right.
back early, right? I bet he would wish he had them back. Bitcoin now, because of it's gone over $100,000 of Bitcoin. Bitcoin now is kind of like gold in that when you have it, you don't want to spend it. It is a guttural,
Hmm.
emotional thing to part with a Bitcoin, like it is an ounce of gold, right? So they're very similar in that way. They are hard assets, and we're not going to get more of them in the future. So consider holding on to what you got. I'm not against Bitcoin. I think the answer is both, not either or, but they're different.
I had this hunch that you didn't think that gold was going to get replaced. So thanks for confirming that.
Yeah, it may someday, but I don't see it. It's not tomorrow. I'll give you that.
I don't see it happening anytime soon either. Another question that comes up from clients from time to time, and frankly, I don't have the best answer for them, so I'd love to hear what you think about it. Is is there a concern about gold confiscation? It's happened in the past. Can you see that repeating in the future? And are there ways to maybe shield yourself from that if it is something to be concerned about?
Yeah, so I may be like the only precious metals dealer on earth that's going to tell you there is no chance whatsoever of confiscation. Now, you can't rule it out, right? It happened already, so it's a 100% chance that it could happen. It did.
Yeah.
But you got to understand the situation back then. So this is 1933. We couldn't pay our bills, just kind of like now. But the gold and the dollar were convertible, right? So you can turn in a gold coin, get a dollar or $20 bill. You can turn in a $20 bill and get a $20 gold piece, right? So they were convertible, and they needed money. They needed honestly to devalue the U.S. dollar so they can expand the money supply, do what
Hmm.
they always do, what
Yep.
governments always do. So what they did is they collected all your gold. They didn't want your gold. They wanted to collect it all so then they can change the official price from like $20 to $30 an ounce, and in effect devalue the dollar. That's what it was all about. That's the end game. Now, since August 15th of 1971, Richard Milhouse Nixon saw to it that there was no longer a convertibility between gold and the dollar. So he cut that tie, and since then, there's really no impetus or reason to confiscate gold. Doing
Hmm.
so would only do one thing, which would piss off the entire gold owning population in your country. So there's no value. They can't change anything in terms of the dollar's value with it. Maybe going back to a gold standard might have some impact, but as long as they're separated, there's no incentive. And the gold market's tiny compared to the foreign currency market. So I don't see any benefit other than just alienating all your citizens. And I think
Yeah.
there's zero chance of confiscation going forward because of what Nixon did in the 70s.
Hopefully that helps a few viewers sleep easier tonight, not having to be as concerned about that.
Yeah, sleep peacefully if you own gold. That's the point of it.
Well put. Rich, I really appreciate the time sharing your knowledge and expertise. It's been fantastic. I know that there are probably additional questions, so is it fair to say that you're willing to field those if folks
Oh
want to
my god.
reach out?
Oh my gosh, yes. Just send them to that email address on the screen. I'll answer everyone. I promise you. That's what we do. We're kind of like evangelists, believe it or not. After all these years and after millennium or millennia of people owning gold and it doing its job, it's hard to believe you have to make the case for it to most of the
Mm.
population. You realize that average holdings of gold in a portfolio are typically, historically about 2% of a portfolio allocation. And right now it's only about a half of 1%. So
Oh,
just
wow.
to get back up to the norm, we've got to do a 300% increase in gold holdings. That's how hated this asset is right now at all-time highs. Plenty of room to rise.
Yeah, pretty amazing to think about the value that we're seeing, and investors are still skeptical, but that's fuel for it to go higher.
Yeah, no question. And I just want to say thank you for having me and share what I know with your folks. I've learned a lot here as well, and I look forward to working with you guys in the future if you'll have me. So
Absolutely. Appreciate it again. And we alluded to this binder a few times during the webinar. Our clients already know about it, hopefully, if you don't talk to your wealth manager. But what this is we have we call it a family resource binder. And it's really meant to get together financial information that's there for your heirs when they need it. So, bank statements, investment statements, your wealth manager's contact information if you're a client. Rich mentioned a number of the things you might want to have put together: inventory, appraisals, purchase confirmations. This is a place for you to store all of that. It can be very powerful. It can be very helpful for your loved ones when they need to reach it. And it could also be a conversation starter. I mean, I know this is not always like when do you bring this up? How do you talk about it? Use the binder as an excuse. Hey, I got this Sam binder. This is what's in it. I keep it under the landline or on the bookshelf or in the safe or whatever it is. But that way they know. And it takes pressure off of how to communicate that. Um, you can update it as you go, and believe me, when the time comes, it'll be great to have all that in one place and not go on the treasure hunt for all this information. So you can scan this QR code. We offer these to SAM clients, but if you're on the webinar today or a prospective client, we're happy to provide you with one as well. So go ahead and scan that, and we'll absolutely get it out to you. I think it's very important to have. So hopefully you take advantage of that.
can I just say I love this and it's amazing in its simplicity. Everybody should have this. So if you're not scanning this QR code, something's wrong.
Thanks for that, Rich. And we also want to open the door for folks that are interested in future webinars. You can scan the QR code, and we'll be sure to keep you up to date. We have more focused webinars like this, where we tackle particular estate planning topics. We also have investment-specific webinars. We try to cover a lot of ground. So scan that, and we'll keep you in the loop about what we have coming up. With that, Rich, thank you. I know I've learned a lot on this webinar. It's been a pleasure having you. Really appreciate the time. And thanks to all of you for joining us.
Thank you all.